Hey there, you're watching Mirae Asset Sharekhan's weekly commodity forecast with me, Anuj Chaudhary. I'll be breaking down what's driving commodities this week and what it means for prices ahead. Stay tuned till the end for crucial support and resistance figures for crude oil and gold. Let's start with the macroeconomic headlines. It is a crucial week ahead with the US Fed's decision due, though the market has priced in that the FOMC will keep rates unchanged at 3.5 to 3.75% when it announces the monetary policy decision on March 19th. The ECB is also due to announce its rate decision expected to remain unchanged at 2%. China's March 1-year and 5-year loan prime rate fixing is expected to keep the rates unchanged at 3% and 3.5% respectively. The IEA unanimously agreed to make 400 million barrels of oil from their emergency reserves available to the market to address disruptions in the oil markets stemming from the conflict in the Middle East. US Q4 2025 GDP second reading rose to 0.7% quarter-on-quarter, trailing the 1.4% market estimate per data released on Friday. Inflation-adjusted consumer spending increased 0.1% from the prior month. The so-called core PCE price index, which exclude food and energy items, rose 0.4% in January. From the prior year, the gauge favored by the US Federal Reserve was up by 3.1%, broadly indicating softer economic traction. Commodity focus: crude oil. Crude oil markets are set for another highly volatile week after US strikes reportedly hit Iran's Khag Island, intensifying the Middle East conflict. Crude oil was volatile last week. It opened at 8,499 and touched an all-time high of 10,549 at the beginning of the week. However, prices plunged to hit a low of 7,207, bouncing back later to close the week 8.4% up week-on-week at 9,052. It is trading above the 20-week EMA. The momentum indicator RSI is also rising but is in the overbought zone. We expect crude oil to trade with a positive bias in the medium term, extending previous week's gains. Resistance can be seen at Rs 10,000 and strong resistance at around 10,800 levels. It may find initial support at 8,500 and strong support at 8,200. A sustained close below the same may lead to a trend reversal. The price indicator is bullish. Commodity focus: gold. Gold slipped below $5,000 an ounce and silver under $80 during early Asian trading before recovering above those levels. The pullback reflected a stronger US dollar and profit-taking after a year-long rally, while surging energy prices and persistent inflation have reduced expectations for near-term rate cuts by the US Federal Reserve and other central banks. Despite ongoing geopolitical tensions, gold's response has been muted as markets increasingly price in a prolonged period of restrictive monetary policy. Bond yields have edged higher, reinforcing the US dollar strength, with the dollar index above 100 on safe haven demand. Meanwhile, a sharp rise in crude oil prices linked to the Middle East tensions is expected to weigh on global growth, potentially shaving off 30 to 40 basis points of global GDP. We see COMEX gold prices further moderating towards $4,800. Weekly price action: gold fell by 2.92% week-on-week. Silver fell by 4.67% week-on-week. The gold-silver ratio gained by 1.84%. Base metals again fared poorly this week. Weekly event calendar. This week, the markets will track interest rate decision from the FOMC, ECB, Bank of England and Bank of Japan, ADP weekly employment change, initial jobless claims, new home sales. These data points will shape interest rate expectations, which will directly impact gold, oil and base metals. That's your weekly commodity forecast from Mirae Asset Sharekhan. As you keep an eye on global data and respect key price levels, we would like to remind you that all of our research offerings are now under one umbrella, the Mirae Asset Sharekhan Research Center. Explore research calls and detailed research reports across equity, mutual funds, F&O, commodities, ETFs, and more. Visit research.sharekhan.com to kickstart your wealth creation journey backed by our research experts. Thank you for watching.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.